Looking at these markets, as John was just talking about, we got some green on the screen, and Scarlett Fu and Paul Sweeney live in our Bloomberg Interactive Broker studio, streaming live on YouTube as well. Let's get to a professional talk about these markets here. Shana Sissel, founder and CEO of Banríon Capital Management in Chicago. Shana, how do alternative investments, how do they fit into a world where, boy, we've got a black swan event that's really causing a lot of uncertainty for markets in general? How do alternatives typically position? How do you think about them?
In these types of scenarios, I think of them as a risk management tool. And that's how I've always thought of them. I think where people get a little lost when it comes to alternatives is the primary thing they think about when they think about alternatives is private equity and private credit, maybe real estate, but there's so much more behind the scenes. And from an access standpoint, the most accessible things are the things that are risk management tools that we've traditionally considered hedge funds. Good example of that is something like managed futures, which everybody hates until they don't hate until the markets take a turn, and managed futures tend to be almost perfectly negatively correlated to traditional markets. I think of it a little bit like insurance. You don't know that you need it or want it until you've had the event, and then everybody runs into it, and then they're disappointed because they don't need it anymore. But I believe it's Michael Kitces who says diversification is always having to say you're sorry, and alternatives are the things you're always apologizing for until things like we're seeing now are happening.
Yeah, risk management tools sounds like a good idea given the uncertainty and the volatility that we've been seeing across markets. How are your clients responding to ideas or pitches of new private credit opportunities? I imagine that that's a tough sell right now because there are so many headlines about people trying to get out of the existing private credit funds that have been really targeted at retail investors.
Yeah, that is definitely something that is not a topic any advisor wants to discuss with their clients right now. It's kind of a third rail. And it's unfortunate because we actually have in our partners on our platform that are private credit, and they're high quality private credit that are very different from the stuff that's in the headlines. I do have concerns. I don't know that there's a real understanding of how important private credit is and this non-bank lending environment is to small business. After the global financial crisis, the banks really tightened their standards in lending and made it much more difficult for small business to use the banking system for access to capital. So much of what we see today started as an alternative way for smaller businesses who couldn't tap the banking system to access capital. And in order to do that, there has to be capital to deploy, and most non-bank lenders and private credit funds can only deploy capital if investors are willing to give it to them. So if there is this hesitancy to allocate to private capital, even in the lower middle market, which is completely not involved with what we're seeing in the headlines and very different in terms of the attributes associated with it, that's going to hurt small business, which I think in an environment like we're seeing today is not being appreciated, and also one of many dominoes that could push the economy into recessionary conditions.
Shana, what's the credit raising environment like today for private credit, private equity? Is that cooled at all here with what's going on geopolitically?
I don't know if it's because of what's going on geopolitically as much as it's what's going on with private credit. It's just structure, and a lot of things that came to market in the last, say, 5 years came to market going after wealth management, not necessarily institutional investors.
Yep.
And so that's made it really hard to raise money in this environment because that is the primary area that's feeling the pain from what's going on with Blue Owl and Ares and the Blackstone subsidiary. So when you think about it, it's just a hard fundraising environment for anything that has these targeted raises and capital calls. People just aren't willing to lock up money, and people are also hesitant to invest in anything that's not daily liquid. And so I think it hurts interval funds. I think it hurts any kind of non-traded BDC, non-traded REIT, non-traded preferreds. I think it helps a lot of things that have been overlooked, which is the very liquid ETF and mutual funds that are more hedge fund-like. But it does definitely hurt fundraising if you have target capital raises.
Shana, when we get to the start of earnings season, it is, after all, April 6th, and it's only a matter of days now before we get the big banks starting to report. How much clarity do you think companies are going to be offering? Are they going to be able to stick with their forecasts, or are they going to start suspending them or withdrawing them, or just kind of not willing to update until they themselves have more certainty?
I think it's going to feel like it felt a year ago when there was all the tariff uncertainty. What I think management executives at these companies have gotten exceptionally good at since, I don't know, since the GFC, since COVID, is really maintaining low expectations. I feel very strongly that much of the reason we've seen all this positivity around earnings has less to do with the earnings being amazing and more to do with expectations being super low and corporate executives going out there and making them hurdles that are so low that they know they can reach them. And I think it'll be much the same. We saw that with tariffs. Every earnings call, the guidance was really, really tepid. Lots of comments about uncertainty of the tariff environment and not really being sure and setting expectations to the point where you could underpromise and overdeliver.
Shana, thanks so much for joining us. We always appreciate getting a few minutes of your time. Shana Sissel, she's the founder and CEO of Banríon Capital Management.